All right, it's April 16th, 2024, Tuesday. Let's go ahead and go over the market structure. Before I begin today, I will say one thing. Um, the reason why I do the structural analysis or any kind of pre-market analysis or post-market analysis on a screenshot of the chart is because oftentimes folks tend to get distracted, including myself, with the movement of the chart and what's actually in front of them. Subconsciously, you will be paying attention to the candle going up and down versus actually paying attention to what the market is telling you. So, just a hint, it's always best to do your analysis, meaning you're trying to make a conclusive decision as to what to do when the chart is not moving in front of you and you're really paying attention to the details that you're seeing. Okay. The reason I'm bringing this up is because I will provide an example later at the end of the video. But anyways, let's get to it. So yesterday I said, hey, we're more than likely to continue on UJ up to the upside up until about 155. We could still surpass that level, go to 156. Who knows? 155.5. Those are the overall areas that we're looking for. There really is no major change. What we do see from yesterday is that we got that very, very nice, healthy close on the daily time frame. And right now, all we're doing is continuing, right? Really no secret. Overall bias is still long. If anyone is looking for anything today, the longs are much more favored than shorts at this point. So keeping it simple, there is no major pullback as of now. We're getting close to New York, so market should pick up a little bit in volume. Let's see what happens. Moving over to, that is okay. I don't want to save the markets. Let's move over to USD CAD, same thing. From yesterday's continuation, we are now continuing. Definitely looking a lot healthier here. Really nice, clean push to the upside. We did have a minor pullback right there, which is the wick. And let's take a closer look at that on the H4. But here we are. Nice little wick. Here we had that major pullback that I showed to you guys yesterday. We see the market literally go down on the H4 and then pull itself back up. Here we're probably going to have a very minor indecision in the continuation. Notice that we are getting near 138.5. Things to keep in mind. Again, doesn't mean that market can't continue since we broke out of the consolidation range. So dollar is still favored. Now, AU. From yesterday, I stated that market, the anticipation is we finally broke out of the range. As we can see, we're getting that confirmation candle today that we are cleared, right? We're completely cleared out of that range. More than likely to now enter a bearish phase, complete bearish phase. That is the anticipation. How is that going to look on the daily? It's going to look completely different than on the H4. But like I said, that floor right there is now cleared, right? We have cleared that floor. With today's close, unless the market decides to pull itself back up. I don't think that's going to happen though, given where we are. Like I said, 64 flat, we are getting really close to that. 63,500, definitely an area that we are very, very likely to target. So those are the overalls. Dollar looking hawkish, AU looking dovish on the daily. And then let's cover the H4 time frame briefly. 1 second so I can bring them up. All right, and there we go. So UJ, continuation. We did get good movement during London. You can see here by the healthy candles, 2 healthy candles on the H4. Is a for sure. Like I said, we wouldn't really see any kind of hesitation or any indecision from the daily as the candle just looks pretty full. So market is just going steady, right? We're making new highs off of the back end or off of the top of each new candle. We're making those highs. That's good. Really, there's not much to say. There's not much to say other than to continue long. There isn't anything halting. There's nothing really that is screaming anything different. Now, there's that pullback. There we go. So that was a pullback from the candle on the daily from USD CAD. We have a nice drop. If you were on a lower time frame paying attention, the structure here from the H1 was very likely like a point A from this candle right here. Point A, here a point B, we get a nice retracement, boom, back to the upside. Now again, moving steady ahead. So this is healthy bullish movement overall. No change again, like I said. And now, last but not least, AU. AU. Okay, this is interesting. Why? What we start to notice with AU is that we get some sort of hesitation. However, does that mean that market will, in fact, potentially reverse, or will it consolidate as it stands? Notice how, and this is important, notice how for each of these retracements, there was always a candle that exceeded the previous bullish candle with more volume. And here we don't have that. Here we have a bearish candle, bearish candle, bearish candle. This was a bullish candle, okay? Opens right here as this candle closed at the bottom. And notice how now we just opened this candle, we made a very minor wick, and given that this candle right here closed bullish, this opened at the top, now we're going back down to the downside. There is the absence of bullish volume. So it's easy to get fooled thinking, oh, I'm just seeing these spikes and I'm just seeing this depletion, but you don't have the confirmation on a lower time frame. Mainly the H4. Use the H4 as a guide because it really eradicates a lot of the noise. Even if you feel like, oh, you missed a move because this is now breaking out, don't be fooled because on the H4, market can go a much longer way than on other time frames. So having that being said, if this is not analyzed carefully, you can definitely make an impaired judgment of going long when, like I stated yesterday, and as I've been noticing and as I've been analyzing, most of the anticipations and analysis from the previous days are rolling out on the next days. So what does that say? That say that I should take my word from yesterday and still try to stick to that bias unless there's something screaming today that is actually changing. And again, this is the continuation of the market, but it conflicts with the psychology of many traders overall because they always feel like, hey, if I can get at the edge of a market or at a hinge or at a hook, right? These areas right here is which I'm referring to. Oh, if I could just get a trade here, and if I could just get a trade here, they miss the overall picture, right? Which is the continuation of the market, which happens a lot more than these certain points, right? Because everyone is trying to just maximize their targets, maximize their profits. But then they miss the whole story. So don't get fooled, okay? Don't get fooled because you can make unpaired judgments because of these things. And hey, it's really because you just didn't take the time to carefully look at the market. So again, overall, the continuation here is bearish. Despite the halt, there isn't any significant rounded hook. There isn't any significant tweezer bottom. There isn't any significant bullish volume yet in the market. This can change in the next 4 hours, no doubt about it. However, at this current point in time, the continuation is still dovish. All right. So I'm going to cover a quick example of what the unpaired judgment can look like. And usually I do this first and then I look at the market. But here we go. As I stated before, market overall is to continue bearish. That's what I had stated yesterday. However, prior to me doing the analysis, like I just did right now, okay, prior to me just doing the analysis, I got hung up on lower time frame, 15-minute, 30-minute, thinking market is going to go long, okay? And it's one of those things. If you go and zoom into the market and all of a sudden you look at this, you will think to yourself that market is going long. You will think to yourself, and that's valid because it looks very much so like bullish structure. But you got to understand what time frame you're on and where the hell you're on. So if we look carefully, I'm going to take out my current position on the short. But if I look at the long, that would have been the worst place to actually enter the market long, even if market actually was to go long. I'm gonna give a quick example here. So this is the top of the range that is consolidating, and this is the bottom of the range, which we are now clearing. And given the volume, we're very likely to break and then continue. Again, anything can change, everything can happen. Market is capricious. So in short, here would have been an ideal long position, but if I carefully had paid attention to what I stated the previous day, I should have just continued with my eyes on the short. And that's just very clear. Look at the H1. We have literally a full retracement above 50% of the previous H1 candle. That means that in relation to the previous close of the buyers, there still is a lot of sellers. We just opened in New York. We got now 6 minutes left to close a 30-minute candle, which is going to be about that big. Given the H1, I'm just going to show this to you guys. There you go. So that's how that 30-minute candle is. And this, then nothing becomes more than just a retracement, right, for entry. So anyways, I realized my mistake and I was like, you know what? I was like, this doesn't look right. I was reading my previous day's analysis and I said, hey, I said that market was going to go short. Why am I not going short? Again, this is getting caught up with the lower time frame noise versus taking the overall flow of the market, which again, it doesn't change so quick. Just trying to get those hooks is difficult. It's very difficult, right? Because it's a big wave and the crest of the wave does not happen all the time. It only happens when it drops. So you got to get in the continuation of the wave overall, which is what we're doing here. So, I mean, all I did in this case, I just noticed my mistake. I cut my short out and I did continue my position, or sorry, I cut my long out and I continued with the short bias that I had stated from the previous day. So now I'm looking to take the trade all the way down to 63,500. That is definitely a long way to go. Let's see how far this trade can go today. But I do believe that we do have plenty of room. And the main reason being is because we are just fresh out of this range. So we can definitely hit this bottom range right here, or at least middle right here. 63, 637. Anyways, that's a cut, guys. I will catch you guys on the next one. Again, risk management, safe stop loss, be disciplined, log your trades, do those steps daily, and do your pre-market analysis before any impaired judgment on a chart that is not moving so that you are clear in terms of your judgment. You're using your rational decision making process and you're not using your emotional decision making process. I'll talk to you guys in the next one. Peace out.